Good evening. This is the weekly market in view with Roy Idrach, and the name of our talk is Tick by Tick. As you can see, we track the market for the week and give you my opinion of what we think is going to come up next week. So to start, today, Friday evening, September 13, 2024, let's check first of all the major market indexes. So with that, let's get over here and see how it performed today. Today, Friday, the major market, the industrial, the Nasdaq, New York Composite, S&P 500, American Composite, the French market, even the German market, and the Euronet, all of them were up today. Dow Jones Industrial was almost 300 points up, and the Nasdaq also was 114. S&P 500 went up 30 points, but I just want to let you know that in the next coming 6 weeks, this is the most volatile season of the year for many years. While all these numbers look good today on Friday, don't fall into the idea that we won't get trapped into a bear market trap. That we won't fall into a market trap. Don't forget to see the full video on my channel on YouTube, so for more description. So we're going to put the link right here for you, and then it will be there. But right now we're making the video, so let's go ahead and do this part. Let's see the major market index and see the seasonality. Seasonality is very important for many reasons. One of them is that you don't want to be buying a stock or investing at the wrong time of the year. This could be a serious problem. So what I have done is we have compiled 9 years of the stock market behavior from month to month. It so happened that we are here in September and October, and as you can see, the performance is don't do too well. For the last 9 years, it has been 50%, but this year is unique because we also have elections. We're coming from some heavy inflation. Everything costs more. It has made it more difficult for people to deal with it. Employment and unemployment have been, for many people, difficult. So here's my opinion. Based on my previous experience on election year, the Fed action is involved now. This is something that we need to consider because the Fed this time has to decide if they're going to lower the interest rate. The Fed has 12 boards of governors that they make that decision, and just not one person. But they're also very picky. They don't want to make it look like they keep playing favors with any political party. They don't want to make good the ones that look good, those that are in power now, or those that come in the future. So it's going to be very, very tough for them to make this decision. To reduce the interest rate, like most people anticipating, of 5%, half of 1%, it don't want to be enough. That won't change anything. However, it might create a short rally that it will fail, and that's something to consider. So we work on opportunity. If the rally comes in and they lower the interest rate, we jump in, collect our money, and leave. I'm a day trader. I've been doing this since 1972, and now I specialize in options. So with that in mind, just remember, and let me tell you what I think is going to happen. Based on this situation, right? So I expect that in the next 6 weeks or so, we got almost 2 months to deal with this, and we're already halfway through on September 13th. So we got another month ahead, and so we put us down between 6 or 8 weeks, give or take. So I expect that rather than be like a minus 2% for the market, I expect the S&P 500 to do between 3.5 and 4.5. I also expect that the Dow Jones Industrial Average will probably move down from the present that it is today, that it closed almost 300 points up, that it will drop between 4 and 5.2%. And the Nasdaq, that is heavily involved with a lot of tech companies that they are over $1 trillion in valuation. Some of them are like Nvidia is almost 13% of the entire Nasdaq. So when these people, the price moves down for any reason and somebody sneezes, everybody catch a cold. And that's actually what happened. So we could see a 5% down on the Nasdaq to 6.5 points due to the heavy percentage of those tech stocks that are there. Most of them are over $1 trillion company. This is very unique because we seldom ever have seen this type of magnitude in a company. However, this do not mean that you cannot make no money. And here's why. In my case, I don't care whether the market goes up or down. My specialty is in option trading, and it doesn't matter to me whether the market are going up or down. I just need to be in the right side at the right time. With that, let's see about the market sector. Now that we know that we could have some trouble, some difficult times in here, I cannot guarantee that it will happen or not, but based on my experience, remember I've been doing this since 1972. Let's see what the market sector are performing. The financial sector, for example, it has been up 30% for the year. Communications have been up 30% for the year. Technology have been 29% for the year. So this is a good investment. They have made a killing, But somewhere down the line we have to have an adjustment. So this is an astounding performance. So it cannot go up forever. All this hype about investors, will benefit with the artificial intelligence AI is all the hype, but that's years away from the full blown. And I remember back in the 90s when the .com era, everybody's going to be making a killing in the market with a .com and stuff like that. And a lot of them disappear later. So we just heading that way, but we're not there yet. When we look at the financials, also they're up 30%, and this is worrisome. I worry about it for the simple reason that they're making a killing on credit card. And the credit card has jumped to $1.1 trillion on the second quarters of 2024. This is never had happened before. The Federal Reserve Bank of New York is the one that track this issue. It's public information. You can see it on their site. So here's the part that is more worrisome. From the first quarter, it was $1.1 trillion. So maybe all these people that are spending money and all the inflation is because people are charging it in a credit card. And that's serious issue because if you own a bank, you're making a killing, when you charge 22 to 25% interest on $1 trillion. But if people start losing the job and if the market slows down, some of those credit cards are going to default. So financial institutions probably concerned about that. And sometimes I think that recently they say Warren Buffett was selling all kind of shares from Bank of America is because also if the government reduce the interest, the banking don't going to be making that much money. And remember, this type of financing is just like printing money out of thin air. Social media is another problem. The techs have been moving very, very high, and they're making a killing also, and it's going to be kind of hard to support these events. So what I think about this euphoria that we've been having, I worry of what happened back in 2008, where we have a market adjusting and many retirement account lost 40% of the money. I don't think it's going to be like this. This is not going to be a 40-50% drop, but a 4% it can happen within the next 6 weeks to make some adjustment. With that, let's look at the market sector in a graph, and this is my opinion. What I did, I marked some of them green, making it that to invest, and I marked other in red, that they got a erratic behavior, and the other one, red circle, means that I don't have no opinion. So I don't have no opinion on financials. We also have other one that I don't have no opinion for the simple reason that they have, for example, money that they don't have right now, like for travel and all those things on it, so that makes it more hard. So it will come up and make this a little bit bigger. Real estate is doing real good, and it's obvious if the interest rate go down, more people are going to buy houses. I'll probably get more money for my house too. The Staples is moving very well for the whole year. This is a yearly chart, and these people haven't stopped. Now technology having problem. That's what I got that little red star there, right? Trouble. They went up like crazy, and now we're struggling to make up the new highs. And depend what company or all this group that are on that sector, you got to pick up the best. Probably Nvidia one of the best, but we still got to go through this storm first before I start putting money into that. The other one is utility. Why utility is going so high? They start moving up like crazy. Well, I'll tell you why. If we get this AI deal, the data centers that are on the pipeline to be built, they're going to consume a lot of energy. These semiconductors microchip that they're building require lower temperature to be faster. So the utility company, somebody has to come up and provide the power for these people. So the consumption of electricity is gonna go up. I don't care how efficient they're talking to be with those microprocessors and so on. Those data centers are gonna be big buildings. There's a lot of money to be made on all those things. Indirectly, you don't have to be on Nvidia or advanced micro devices. Probably you might be in better source with the guy that provide all the power to them to make and operate those microprocessors on the data center. The other one is consumer discretionary income, and it's obvious that they're flat. Theme park, Disney and stuff like that are cutting down. They don't have as much money as before because you got to put food on the table and it gets very expensive. Now, with this, let's move into commodities. What I think about commodities? Well, let me tell you that my career started with commodities. Let's see, right? So, back in 1972, that's over 51 years ago, I started trading commodities. I got market here with this little red cycle, semi-square here. was copper and oil. I'm going to tell you why I like oil. I was trading a contract of 1,000 barrels, and for every dollar move, I was making $1,000 on oil. So that was pretty good. On copper was the same thing. For every penny that copper moved, I was making $250 or losing $250. Okay. Back then, copper was like a 65 cents a pound, and the contract comes in with 25,000 pounds. Now, there's a lot of hype about gold. People buying gold, buying this. I got an opinion about this too, and I'm going to tell you right now what it is. I have bought gold, right? And material gold, but you have to pay $10 an ounce when you sell it, and the dealer charge you $10 an ounce when you buy it. So you need a round trip of $20 before you start making any money. Gold goes in cycle. This is something that you need to know. Back in the 70s, there were people making a killing. Silver up $50, gold was $300 and something, and then eventually it reached about $700-800, and the market collapsed. It went from $900 to $300. Well, by my experience, and I'm going to tell you now, it took almost 21 years after that collapse to come back. Can you afford wait 21 years before you break even? The better investment than that. So this is what I don't like gold. But if you want to buy gold, you also can buy through an index that buy gold, it responds to gold, the same thing with oil, and then you can liquidate right away. Nowadays they don't even charge you no commission, so you don't like it. Remember that you buy the physical gold, then you have to have some place to rent, to protect it, pay a safe deposit box, all that stuff is an expense. And 20 years for me waiting for recovery is a lot. I don't have time for that. I know it also happened with the stock, but this is not the point here. I want you to know that I quit trading commodities a long time ago, and I moved into stocks and options. But commodity is too much of a risky business, especially if you do grains and everything like that. And this is not my cup of tea anymore. So my experience is my opinion. If you think you can do, that'll be fine. But think about that. Many people contradict what I say, but they don't know what I know. Let me say that there's a fool born every day, and also there are two sharks out to get them. Think about that. And the same thing happened with crypto and gold, stuff like that. You never see a dealer saying, "Oh, it's gonna go down." They always all the time say, "It's time to buy because the price is cheaper now." Think about that. They're the one making the commission. You're the one that putting on the money. So finally, let's look at crypto. I don't trade crypto, okay? I already told you I specialize in options. Excuse me. So let me say that I don't trade or buy any crypto. Many people like it, and that's fine with me. I don't care. It's their money. Everyone has a dream, and the reason I carry it here because people like it to see about cryptocurrency, how they're behaving. But I only will do options. So if sometime down the line a reliable dealer comes up, I will consider options on crypto. But buying this stuff, you gotta think about this. Crypto is just like fiat money. They're both the same. You got a piece of paper that says $100, $50. It's a piece of paper. It's just work on faith. That is the problem. Both of them depend on faith. They are not reality and they are not tangible. If you buy a home, you got something tangible that you can see and feel. But not when you got $100 in your pocket. It's just a piece of paper. It's just that we've been raised and brainwashed into this idea that because faith somebody else accepted is a good deal. So as I take $100 out of my pocket, it's no different than crypto. If I go to the store and want to buy something tangible, the guy, I give him my piece of paper and he gives me what I want. But remember, the piece of paper don't even worth pennies. The guy on the counter accepted because the government say he must accept it. If a company refuse to accept American dollar, the federal government comes in and close the business. You either accept it or else. This is when you look on the paper what it say. This document is good for public and private transaction. You cannot refuse to take it. But the funny part of it is that most people been brainwashed with this because we from birth we saw this happening when I was a kid, so it's okay. Since I was a kid, my dad worked, they get paid, he used money, so that's the normal. But when you really think about it, it's nothing but a piece of paper. Tangible is a different story. So as long as the scam works, everyone is happy. So let me tell you, have you ever heard the story about the guy who went to Africa to buy monkeys? It's a very interesting story because this is actually no different than crypto and our paper money, our fiat money. So this guy goes to Africa and he was offering the guys to pay $25 for each one that they brought in to him. Eventually, he bought so many monkeys that it was difficult to get some more, right? So the guy's cursed. So he raised the price to $50. You know what? I pay you double the money, $50 for every monkey you bring in. So people try harder, you know. All those hunters went and looked for more monkeys to sell it to him. Eventually, the same thing happened again. He had to raise it, and now it's $100 because it was more difficult for the hunter to find. In other words, the supply is getting scarce. It's less supply of monkey now with this guy buying all of them. One morning he comes out and tells the hunters, I'm going to England to find a buyer for all my monkeys. And you're going to be rich, very rich. Man, you're going to have money that you won't know what to do with. Starting today, I'm going to start paying you all $150 for each monkey that you bring in. I will pay you when I get back. But I'm leaving my friend here to take care of the monkeys until I get back. On the written version that we issue, the paper version, we said you need to see the video. Well, we're on the video now. I'm going to tell you what happened from here on. What happened is that the guy left and months went by and he don't coming back, and the guy that was taking care of the monkeys turns around and tells the hunter, say, hey, look, why don't we do something, man? The guy gonna give you $150 for the monkeys when I get back. Rather than struggling to hunt it, I sell you all this for $75. And the hunter say, what? Yeah. And when he get back, guess what? You can double your money, sell it to them for $150, like he agreed. And the hunters, of course, they go, oh man, that makes sense. And they went and gathered relatives and everything in and borrow the money and buy all the monkeys all over again from the guy that was buying them, but now it's his friend who's selling it to them because he's getting tired of taking care of this monkey. And the guy left with the money, and the hunters sat there for years waiting for the hunter that came back to come back to buy the monkeys. Get the drift? Cryptocurrency is just like that. And paper money is just like that too. somewhere down the line, the bottom gonna fall off. And when it do, somebody's gonna get hurt. So the hunter's still waiting, right, for the guy to come back to, so they can sell him for 150. They scam the money out of them. They raise the price so high, and now his buddy, his partner, turn around and say, selling to you for 75. So they got all the money back and some, and then they left. Think about that next time you invest. There are a bunch of sharks out there trying to get into your pocket. Well, so much for the sermon. Let's move on now to continue to see some of the crypto coins, how they're going. Of course, we can see that Bitcoin is doing very well at 60,000. Some other coins are taking a beating, we can sit here. Some of them are doing real good, others doing bad. But as I told you before, I don't deal in this, but I provide the information for you all to take a look at it. You can increase people that get the copy in paper, they can increase it and see how it's performing. So very few of these cryptocurrencies are doing too well. And notice how erratic it is, how they move up and down, and then 2-3 months later the whole thing collapses. It's a con game. We play the same shit on the market. I tell my friend, hey, why don't you buy this stock for me? Buy a whole lot so drive the price up so I can get rid of mine. See? And he buy enough of it and managed to move the price and clean it up, and he short the other side, and somebody gonna get burned. It's nothing new. It's done every day. This system is very corrupted, no different on what you do. There's always a shark out there looking to take the money out of your pocket. Do you know that the account from Robinhood, they got millions of accounts that they got less than $10 balance? And I'm going to tell you why. Because of the 90-90-90 rule. 90% of investors, those retail investors, they lose 90% of the money in the first 90 days. So they constantly have to be advertising on TV to replace those accounts that they don't have no money to trade. Thank the Lord, I'm glad that I learned this long time ago, and I'm more cautious. I don't believe on newspapers or media. I made my own decisions, and I'm no part of the 90-90 people that lose 90% of their money in 90 days. With that, we finish, and let's go and see all the trading that we did this week. This week it's been very weak. It's a week that market have been kind of self-finished. You don't get nowhere. The stock goes, the market goes up, but the price of some of the stock don't go up, and therefore we haven't done much trading. We conducted 2 of them on this week, and it was on the week of September 9 through September 13, 2024, and this is what happened. The trade number 1 that we placed on September 9, 2024, it lasted 42 minutes. It was a put option. This option, what it means is that we expected the price to go down, and as the price goes down, we make money. As you can see, when somebody loses money, somebody else get it on the other side. So it lasted 42 minutes, and then we got out. In one trade, we make $30, and in the other trade, we make $900. And it was at this point when we went in right here, and the price started dropping. As soon as we saw the first green tick, now you know what we call it, tick by tick. First green tick, we got out, and we netted $930. On trade number 2, that took place on a different date. That was the 12th. So we go with 9, 10, 11, 12, 3 days later. So it was only 2 trades this week. We go in and we buy now NVIDIA again, but a call option, meaning that we expect the price to go up. It only took 13 minutes before the price change direction. You gotta be fast, brother. 30 minutes is not much time with this thing ticking away. Anyway, we got in on the first red tick. That's where you see the eye down here in the chart. We got in, the trend had been established, and when the first tick came up, that means a resting period, a breath, and then it took off again. And when the second red tick up here at this point, it started coming up, we got out. So we went in at 10:21 in the morning, September 12th. We got out at 10:34, so that's about 13 minutes, and we netted $4,600. And that was all for the week, folks. And now you know where we got our name of tick by tick. In England, they call it PIP, P-I-P. And people who work in the stock market in England, they say they work at the city. They don't say I work for Goldman Sachs. I work at the city, meaning that they are in the financial business. And now remember, thank you very much for your time, and we'll see you next week with one more of Tick by Tick. Thank you for your time. Bye-bye.